Standard & Poor's says that U.S. home prices have hit their lowest level since 2003. The ratings agency says their latest Case-Shiller index confirms a double dip in home prices across 20 U.S. cities, with only Washington, D.C. seeing prices rise. Joining us now to talk more about it is the co-founder of the index, Macro Markets chief economist Bob Shiller. Bob, great to have you back here.
Nice to be here.
But not so pretty in terms of the data. I mean, have we hit rock bottom in your view in terms of home prices, or can we see more declines because we've got foreclosures coming? We still have lots of supply.
It's a familiar question, isn't it?
It is.
Yeah, I've heard that before.
When do we get to stop asking it?
A lot of people had hoped that we hit bottom in 2009 because the price, well, they started going up again and confidence started improving, and we had the home buyer tax credit. And that helped a lot, I think. It gave people an upward momentum. But now the home buyer tax credit has expired, and they started heading down again.
Right.
Was that a help or a hindrance? Because, you know, a lot of people are saying if we didn't have that, we would have gotten to the level where we need to be sooner. I mean, what's the point of delaying the pain if we still feel it in the end?
Well, I think there is some reason to delay the pain because we were on the verge of a Great Depression. People were worried about it, and they could have really stopped spending, but they didn't. So I think, you know, you can criticize past policy. Who knows what would have happened? But I think that, at least to me, it's a sign that our government was trying something, and it probably helped.
You know, so you're expecting more drops, but you're not panicking. That's what my notes say. I mean, you're not panicking. Why not?
Well, I think normally home price, if they go up, down 10, 20% in you know, over the years that you own it, you don't even know it. Most people. So what's going to happen? You know, it'll go down for maybe 5 years, and then it'll go up for 5. You won't even pay attention anymore. So what?
well, as long as you're not doing, you know, buying your house in a speculatory way, right? As far as an investment, those people you think have been driven out of the market, or?
Well, they're not driven out of the market, and there are some good buys, I'm sure. There's always good buys somewhere, because when the market is very distressed, I imagine there is some money to be made. I'm not doing that. But I think that we're over the period of thinking of housing as largely an investment.
The mindset has changed.
It's done.
Well, I don't know, but I suspect that, say, young people who weren't really in the mood to buy a house, they would buy a house now to get into the market. And they'd get all these nuisances of fixing the roof, and I didn't want to do this, you know. And now, I mean, you won't do that anymore. And so it lowers the investment demand for housing.
I got to ask you because, you know, the question Carol asked you, we ask you all the time. Have we hit rock bottom yet? And a lot of people, you say, thought we had in 2009. You, though, have always been not optimistic. I don't want to say pessimistic, but you've always been concerned about more downside to come. Is that just your natural, part of your natural character, or?
I don't think so. Well, I may be deluding myself. I put 100% of my money in the stock market in the early 80s. I thought the market was underpriced. We had price-earnings ratios below 10. You know,
so there have been times when you saw upside. This just isn't one of those times. It hasn't been for years,
maybe
really.
I may sound like a broken record, but look, home prices have been declining for.
No, you've been right. You've been right.
Right.
5 years ago was the peak.
I mean, Bob, part of the problem is things got so distorted. I mean, the values just made no sense, so that we've got to kind of get back to where it makes sense again, to kind of normal levels. I mean, and we're not there yet. Or are we?
Yeah. Well, I mean, the construction industry is dead right now. So they don't see any profit in building homes at these prices. So maybe we're there. You know, there will eventually be population growth will create new demand.
But there's still lots of supply out there.
That's the problem, yeah.
Well, and you have had a chart charting house prices back to 1890, which is interesting because adjusted for inflation, it kind of moves along a pretty flat level.
Yeah, isn't that
and then it all of a sudden spikes. Here, we actually have it. You know, it moves along pretty much in the same range from 1890 to, what, 1980 or 1990? And then
1997 is the date that I would give for the beginning of the upswing.
But it looks like we've come back to at least close to the sort of equilibrium level there.
Yeah, just about. The question is whether we'll overshoot. So, you know, you can see that around the time of the Great Depression in the 1930s, we were overshooting, we're too low. They had a housing crisis as part of that event, too.
Well, it took forever to recover. I mean, still until 1950 before you come back. Do you think that the government needs to do more to support us here so that we don't overshoot on the downside?
Well, I mean, we already have monetary policy. Interest rates are at 0. Mortgage rates are really low, and you'd think it would make things attractive, but not yet. Maybe there should be. Maybe a QE3 is called for. But, none of these things have solved it. I think basically they're just going to keep falling. The government isn't going to do enough to...
I mean, do we have to start just changing our thinking about houses, real estate being an investment? I mean, is that going to really change, or give it another 5 years and maybe we'll be back to, well, it makes sense to invest in a house? I mean, or has something really, is it different this time around, finally, with housing?
I think we have to get past the idea that, and maybe we are getting past it, that real estate is just this wonderful investment that always goes up, that there's this money machine available to anyone. Get a mortgage and leverage yourself up, and you make. A lot of people did make money doing that, but get past the assumption. We are getting past that assumption. People are losing their enthusiasm, and that's part of the reason the home prices are falling.
And let me just follow up in terms of government involvement. Do we really want the government involved in this anymore? I mean, isn't it time to kind of just leave it alone?
Well, I still think government is really involved through Fannie Mae and Freddie Mac, and I don't think I want to shut them down now.
We can't.
Well, we're not going to, I don't think, because it would be we would see more drop. I mean, it would be really bad for that market, and it would throw us into another recession, I think.
I got to ask you about, I've actually a lot of viewers writing in now that want me to ask you about specific regions of the country, which, we couldn't go through all 20. I think more interesting would be the socioeconomic breakdown, because we did a story last week that Greenwich houses that were normally 10 or 15 million have just dropped in value, whereas the ones that are between 1 and 2 million are sought after.
Right.
Do you see that breakdown across the country?
Well, we also have 3-tier indices for low, middle, and high-priced homes. And what we learned from the experience over this boom and bust is that it was actually the low tier, the low-priced homes, the bottom third, that appreciated the most and that dropped the most. Recently dated, I haven't seen it as clear, a pattern like that. But I think that is a reflection of the subprime. Subprime loans was part of this phenomenon, and they were given to low-priced homes, so there was more of a boom and bust in those.
Bob, we care obviously about housing so much because of its impact on the economy and the input into the economy. Talk to me a little bit about the connection between housing and GDP. Should we be concerned about what impact what we're seeing in this data today is going to have on future GDP?
Well, usually there isn't much relation between home prices and GDP. There's a couple of exceptions.
Yeah.
The Great Depression and that's of the 30s, and the recent financial crisis. I think home prices only begin to play a role when there are massive swings. This recession was intimately tied in with real estate, and it was in the real estate sector that the problems in the subprime crisis began. So I think that it may be important in order to keep. If home prices keep falling, that would be a bad signal under the current situation for the economy.
All right. Thanks so much for joining us. Bob Shiller there, co-creator of the Case-Shiller Index.